With rapid increase in terrorist attacks and death casualties, the expenditure on security has also increased. During the last decade, a jump of around 4.5 times was observed in security expenditures. It left multi-dimensional effects on the country's economy. It raises the tax, cut in subsidies, and cut in development projects. The peak of this war has been facilitated by the highest rate of subsidy in 2007 and 8, with 52% of indirect taxes, and this remains the ideal year. Policymakers then started cutting subsidy to finance the war on terror. But when the subsidy cut and taxes couldn't fulfill the government needs, it started printing more money out of thin air, which took a heavy toll on the larger portion of the population. As a huge loss in purchasing power pushed down the already marginalized segment of Pakistani society even further. In recent years, two governors of Pakistan's central bank and a finance minister have tendered their resignation due to differences over policies with the federal government. The last governor says that he took the decision to avoid a deadlock with the government in economic decision-making, indicating the level of influence exerted by the federal government to pursue its own instead of national agenda. This man, the former governor of the State Bank of Pakistan, has this to say about the deficit financing the central government is doing due to the war on terror.
Our outlays on defense and internal security, like the Coast Guards, Rangers, Frontier Constabulary, Frontier Corps, have expanded quite substantially. So in order to finance this deficit, which is the gap between the receipts and the expenditure, the government had no other option but to go out and borrow from the state bank. And when you borrow from the state bank, that means that you are increasing the money supply. And because the money supply is increasing, that leads to inflation. So for the last several years, the country has been suffering from inflation, both of the commodity cycle, but also because of the deficit financing of the federal government's budget by the central bank.
While the former head of Karachi Chamber of Commerce and Industry, Mr. Anjum Nisar, is of the view that the enormous money creation killed our competitiveness in global market.
In the last 6 months, what we have seen, government has been borrowing continuously around 2 billion rupees per day. 2 billion rupees is a huge amount of money, getting notes from the central bank, which means central bank is printing money and government is getting free money at the cost, which as a result is hitting the average consumer, average people of Pakistan.
The soft image is like a cashable commodity, as it is an important source for attracting foreign direct investment, which saw a sharp decline in ending years of the last decade. A major concern for Pakistan is the perception in financial market that as a country it is failing to deal effectively with terrorism. In such a situation, market face high-risk premiums and the cost of protecting assets rises, reducing investment inflows. Pakistan's perception in the war on terror has led to an excessive increase in the country's credit risk.
Since we started the war, the participation war on terror, people stopped coming to Pakistan. There are travel advisories. There are higher insurance premiums for goods and services to be procured. There are cancellations of orders. That's what we have been facing for the last 10 years.
Over the estimates of damages of this war, there are disagreements among economists who are towing the government line and just focusing on the physical or tangible losses, and those who include soft or intangible losses as well, like the loss of image and negative messages from the travel advisories of allied and non-allied countries in the war on terror.
The biggest loss is to the reputation of a country, which is then classified as a high-risk country. And therefore, anyone outside that country who wants to trade with that country builds that risk factor into the pricing mechanism. And as a result of that, we suffer because we are at the receiving end of this spectrum. So $68 billion may be the amount of perhaps the estimate of the physical infrastructure that we've lost out. But the point is, the continuous loss that we have been suffering for 3 decades in the form of additional prices built into every transaction that we enter into with the rest of the world, that has not been calculated. If you add up all that, it will go beyond, I would think, $200 billion. That's the real cost.